Is now starting. All attendees are in listen-only mode.
Good day, everyone, and welcome to Admiral Markets webinar. Renko range bars part 2. So today we are going to see some nice trading strategy concerning range bars. This is the strategy which I used 4 years ago when I was trading range bars as scalping. So today you will see, of course, the first strategy on range bars, which is very successful and which has been very successful during the years, especially in the view of scalping. The strategy is very suitable for beginners. I will also explain you how you can set it up on your chart, and we are ready to go. So let's see, there is disclaimer, risk disclosure statement. All the risks associated in Forex market are covered with this, and by proceeding further you are accepting all the risks associated with Forex market and trading. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, me, and in no way it represents the actual suggestion for the trade. These are not AMUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This is personal opinion only. This webinar is for informational and educational purposes only. So, quick resume and just a few answers for your questions. Last yesterday, we had excellent setups on, I will show you here also on Admiral Markets blog. I did that. Setups were on Aussie, New Zealand, which went good for 40 pips, and Euro, Australian dollar, which went good for some nice 60 pips. So always follow the updates analysis on Admiral Markets blog on SPY.zen. So let's get back to webinar. Also, I need to say that Renko and range bars are very similar, but my choice is always range bars. It has, for me and for my style of trading, it has more advantages than disadvantages than Renko bars. And as I said 3 years ago, I traded range bars really extensively, and I traded mostly euro dollar with scalping range bars. So this is one also of methods which is successful, and you can of course try it. A few quick let's see a few quick things about range bars. What are range bars? Who developed it? How they work? So range bars were developed in mid-1990s by a trader named Vicente Nicoleles. He basically developed range bars. Range bars were not so popular before that time, and no one practically knew about range bars, and then in 1990s they were developed. Range bars advantages are basically which they exploit volatility. So range bars really do a very good job if you pair it with MACD, especially MACD on a certain setting. We will see that later. And you know that MACD is a nice indicator which exploits volatility also. It traps the trend and it gives nice signals for momentum. Range bars are also a cue for momentum. They give you momentum cues, and when volatility is high, more bars will be printed out. When volatility is low, less bars will be printed out. So just by looking at the charts and looking how the chart prints out those range bars, you can see the volatility. I can say that range bars completely neglect the need of time. You don't trade any time frame. You don't trade nothing concerning time. You just trade price action. So price action is basically, it's a different dimension from range bars, but the range bars are also we can say a form of price action, because range bars give you the exact price timing and exact range of the currency pair. So if you put that your range bar should be at 5 on your settings, your chart will only print 5 pip bars. If you put it to 3, your chart will print out 3 pip bars. So it's a sort of price action, but again, I say it's a different form, it's a different dimension. Price action, harmonics, indicator base, chaos, Renko, range bars, those are all different dimensions. And characteristics of range bars are that each range bar must have a high, low range that equals the specified range. Each range bar must open outside the high-low range of the previous bar. Each range bar must close at either its high or its low. So those are rules, but you don't need to know that by your naked eye when someone asks you about range bars. You will see that in action. Later I will show you that system, and I will show you real-time charts. So for example, if you use 10 pip bars or 25 pip bars or 5 pip bars, everything will be printed out on your chart. Today we will see a scalping system, and in one of our next sessions I will show you also range bars system, which is suitable for intraday trading. It doesn't use scalping mode, it uses basically intraday mode, so you will go for 20, 30 pips of a profit and even more. Of course, we need to know that range bars do work also with new MT4 build. I will also tell you how you can set it up on your charts, and you need some of indicators which are not integrated by default on MT4. So if you're interested to try a range bar strategy, of course you can mail me after this webinar, tarantulafx@gmail.com. You know my mail. I will print it out, of course, and I will send you the complete template. But you need to look at the webinar, so you need to see how system works and basically how you can set it up on your charts, because it's not very suitable for beginners. But if you follow the tutorial which I have made here, you will be able to see how you can set up your range bar charts on MT4 platform. So let's see that this perfect example of range bars. Every time the price moves 10 pips up, if you put the settings on 10, then it will print a new bar. So each of these range bars has 10 pips in it. So 10 pips here, 10 pips here, 10 pips, 10, 10, 10, 10, 10. So range bars are especially suitable for scalping and for breakout trades also. But I also know a system which I tested some time ago when I wanted also to make introductory webinars about the system. That's intra-day system, which basically it's the same as it's not the same as this, but it's the same as price action system, because it uses pullback and then you go with entry. Maybe I will present it in one of our premium webinars, but bear in mind that system requires some knowledge about these range bars. But it's very straightforward, it's not hard. So maybe I will think about it. At the moment, if you're satisfied with this, how this works, because I advise you to use this strategy on demo platform, and then if you're successful, you can go live. I traded live this system, but I need to say this system, which I will show you, is suitable for scalping. It's not intraday system. It's not system which exploits counter trends. It's perfect example of range bar trend scalping system. So that is the only thing which you need to know at the moment. The system which work today is trend range bar scalping system. This is example. If you use 10 pip bars of 20 pipe, it doesn't matter. Everything will be printed on the chart. This example is on M10. M10 is offline chart. You need to use offline chart when you want to trade range bars. So every 10 pips, when price moves 10 pips, it will print out a new bar for each 10 pips. Range bar's advantage is that the information displayed is completely irrelevant of the time frame. That is the biggest advantage of range bars, because time does not exist as a factor when trading range bars. You're not interested in time frame, nothing. You just trade those pips in range bars. 10 pip range bar would ignore time and instead concentrate on price movement alone. And of course, you know that price is what ultimately matters. Once the currency trade moves outside 10 pip range, as we said here in this example, another candlestick will form no matter how many minutes or seconds this may take. So it completely ignores the time. If you put your range bars to be on 10, that means that the range bars will be printing 10 pips up or down. So each 10 pips will be printed out. If you put your range bar settings on 5, so this range bars will be this will be euro dollar M5, and you will have M5. You will have 5 pip range bars. If you put this to be on 25, you will have, of course, 25 pip bars and so on. So this is basically what it tells you, how big are those range bars. Of course, you can change it, because I usually, how I did it, if I put 10 pip bars, then I will make euro dollar offline M10. If I put 5 pip bar, that will make euro dollar M5. If I put 3 pip bar, as we will use on scalping system, then I put it as euro dollar M3. It serves as a possible entry, early entry, opposed to time-based entry, which might be a late one. So usually range bar's advantage is that it's a very early entry opposed to chart, which basically just uses time and entry. Those are standard time frame charts. The market can be clearly seen with no noise. With no noise, so this is same example. You have M5, you have a 10 pip range bar chart, and you can see that 10 pip range bar basically eliminated most of the noise. Now, each bar is the same height because the range is constant. So the range is constant. Each of these bars have 10 pips in it. 10 pips. You need to use also script to generate it. We will see that later. The close of a bar is always at the high or low of the bar. So the close is always here or there. It doesn't matter. The open of a bar is always 1 tick or pip below or above the close of preceding bar. So if the bar is here, the open is there. The time period covered by each bar varies since time is irrelevant to range bars. So we don't know how long it will take to make 10 pip of a range bar. We just don't know that. We can wait for 5 minutes, we can wait half an hour, 2. If 10 pips is not printed out, you won't see a 10 pip range bar. All gaps are filled with inserted phantom bars. So if there is a gap, let's say that there is a gap, basically this will be covered. If there is a gap from here to here, this will be covered, phantom bars. So gaps also do not exist as a factor in range bars. There are some options in range bar configuration which can show some gaps, which can show most of the gaps, but we don't do that. We don't want to see any gaps, so all gaps will be automatically filled with inserted phantom bars. MACD works quite good on range bars. On range bars, it's very easy to find support and resistance, and we will see in a system which I will be presenting you just a little bit later how you can easily take profits and stop loss. MACD works quite good on range bars, and MACD on these settings, which I will tell you, works excellent. It's easier and often more profitable to scalp on range bars. Breakouts are also good to trade. They also will show whether the range bar is whether bullish or bearish. Time lag is nullified. So there is no time when you train range bars. The thing is, what are some disadvantages of range bars? If you do one sort of trading, and if you're an experienced trader, sometimes it's hard for you to switch from price action to range bar, or from indicator-based trading. Although it's easier to switch from indicator-based trading to range bar trading, because this is also a form of indicator trading, but it doesn't use time frames. It's impossible to analyze markets just with range bars. So it's easy to trade. You will see this system is really a simple one. But the thing is that it's very hard to analyze market just with range bars. So basically we just use it for trading. We don't use to analyze. Candlestick patterns do not exist in this dimension. So range bars just don't know about candlestick patterns. Although you can see some forms of those. This looks like a hammer, let's say. This might look like a hammer. This might look like a shooting star. But actually, range bars are here 10 pips. So it doesn't matter. It isn't valid for candlestick pattern to be shown. So we say that you just do not use candlestick patterns with some with the range bars. Most of classic chart patterns do not exist, except some. Some patterns can form. You can see W pattern here. You can also see M pattern. You can see some nice head and shoulders if it forms. You can see also some, as I say, head and shoulders if it forms. But other forms of patterns, just range bar is not suitable for it. Usually you can trade only with a trend also. That is also a disadvantage. But if you're a trend trader and if your style is to trade trend, then you don't need to worry about. Because trend trading is about, it doesn't matter if you use price action, indicator base, scales, harmonics. Trend trading is a different dimension in trading. We know that. Trend trading is completely different than counter trend trading and with breakout trading. Because on trend you wait for a pullback. That is a simple definition of a trade, of a trend trade. On a trend trade you wait for a pullback, then you wait for the price to go and hit some levels. Same for shorting into resistance. You wait for a pullback or to price to jump, and then you short it out at the top or close to top. So basically with range bars you don't go counter trend, you trade with a trend. It always requires additional filters. Additional filters in this example will be EMAs and MACD for entry. Often you would need other indicator for placing stops. Often, but I will show you that you don't need other indicator because it's very easy to see where you should place stops. But often on that strategy which I was telling you about, that pullback intraday strategy, you just need hourly pivot point or daily pivot point indicator. On this you don't need anything. It requires a script and you need to open it as a flying chart. So it's a bit, for some people it may be a hassle, but I will show you it's not that hard. So how you use it? Now you can read carefully through this, and this is how you set up range bars on your MT4 platform. And it's modified, of course, for MT4 Bill 600 and plus. I will give you a brief moment to pause the screen and to print your screen, and then I will proceed. And after this, I will show you on live chart how you can do it also. So just pause the screen and then print screen so you can use this PPT as reference for putting MT4 range bar chart alive. Okay, so you put indicators in MQL4 indicator folder or your MT4. So you need to put indicators there in MQL4/indicators folder, because as you know, MT4 has changed after Bill 600, and indicators should go in other folder, not where they were. Then you put the scripts into MQL4 scripts folder. Then you put a template folder into templates folder. And the process, which shows range bars or chart, is pretty simple. So let's say you will trade euro dollar. First drag range bars, AX4S content range bars script. I will give you this script if you mail me. From scripts folder to euro dollar 1 minute chart. I will show you also that later, but just pay attention now to this and try to think about it, because you will need this to set up properly. Then in settings, put range bars range 3 and time frame 3. Go to offline near MT4 and open euro dollar M3. Apply the template to that chart and you have it running. Mind you, however, that range bar script must run on 1 minute chart. It must run on 1 minute chart. Indicators which we'll use in this strategy is EMA 50 is blue, EMA 110 which is red. MACD 2-line colored signal, it's a different MACD 2-line indicator. I will give you complete template if you're interested. Then the settings need to be 865. For long setups, EMA 50 needs to be above EMA 110. And if both EMAs are aligned, we wait for MACD signal to go long. The specific MACD signal lines come when MACD goes below the zero line and crosses as green line from below. We will see that also in charts, but if you see that both EMA are aligned and the price is retreating slower to this EMA, you will go long when red signal appears on MACD. So this is the cross from red to green, and when green cross appears at the first signal, your MACD 2 indicator will also give you the signal you are ready to go long. So your entry is the green line for long entries. So the important thing is that MACD needs to go below zero line and then cross as a green signal. This is for long trades. You will see blue needs to be above red, and MACD should go below zero line, and next signal is when color of the MACD switches from red to green. And you always enter on the very first cross. On the very first cross you will enter. So when you see that the red line is below the zero MACD line, then it crosses as a thin blue in this thin blue line, and you will see green. When it crosses this thin blue line, you will see green here appear, green line appears, then it's your entry point. We will see that on live charts. Trend-based short setup is vice versa of long setup. MACD needs to go above zero line and then cross as a red signal from below. So from this point, this needs to cross, and that is the entry short. Now you don't go short anywhere there, anywhere. You just neglect these signals. Next entry will be also here, but red needs to be above blue. So red needs to be red needs to be above blue, and MACD needs to be above zero, but you need to wait for this red cross. So you enter always on the first cross with range bars is closed. So when you see that the green line is above zero MACD line and then it crosses below this blue line, a red signal will appear, and that will be a signal to go short. Now let's see a live chart. Now how you set up your charts. This is very straightforward. Now pay attention to this, because this is how you set up range bars on the live chart. So this is live chart. Everyone should see live chart screen. And now you see euro dollar is 38.16. Little digression here. We will have FOMC later, and on dovish comments, euro dollar can jump to 38.80. So be very, very cautious if you trade today. Now, how we set up range bars on your chart. First thing to do is go to your scripts folder where you put your S constant range bars and put it here. Now, S constant range bars will ask you bars, range, time frame, and this should be leave a default. Rescale for 5-digit true, show gaps false, maximum 10,000 bars. Where we go is, what did we say? A quick reminder. We go with 3 range bars and time frame should be 3. So here you put 3 and there time frame you put 3 also. Okay, right? Now, that is good. It should be like this, as constant range bar started. Mind you, however, whenever you switch from accounts or you close your platform, this will be as constant range bar stopped. Then you need to put it here again, and it will ask you to put also 3, 3. So use 3, 3 for settings. So once more, you put here, you put 3, and here 3. Okay. Then when you did that, you need to go File, Open Offline, and look for Euro Dollar M3. Why M3? Because on S constant range bars you put here 3. This means bars range 3 pip bars and time frame it's 3. That is why you need to search for offline, open offline, Euro Dollar M3. Here, if you put it 5 there, it will be Euro Dollar M5. If it's 11, it will be Euro Dollar 11. So if I use 3 pip bars, I always put time frame 3. So offline M3. But of course, you need to use it. You need to use it not like this. Let me do it again. You need to use it on a separate template. Let me see, blank main here. So this should be like this, Euro Dollar. Let's close it. Here is Euro Dollar M1. It's always on M1. Always remember that. It's always on M1. Then you need to put this, yes, 3, 3. And you open a separate chart and you go to template, scalp. It will be like this, 3 pip free. It's template, 3 pip free. This is the template which I will give you, 3 pip free template, if you're interested in this. And this is your chart, your working Euro Dollar M3, it's 3 pip range chart. It's very straightforward. You see how it captures the trend. If blue is above red, then you need to wait for MACD to go below 0 and make a green from below. So this is the entry. And you see here, nice 14 pips. Mind you, this is scalping system, so you go to 5 to 20 pips. Usually, you will go in between 5 to 10 pips. How you determine exit points? You can just place a horizontal line at the previous high, and usually when the price gets close to that previous high, you can close it. Of course, you can use trailing stop when it's in 5 or 10 pips of a profit. It's up to you. I usually close trades for 8 to 10 pips on scalping mode. Your stop loss is below last low for long entries. So it's below this low for long entries. And your entry is here. When you see that first signal has appeared, first green has appeared, then this is a signal to go long. So you go long here and you take some profit there. Your stop loss should be below this low. Usually your stop loss is somewhere around 15 to 20 pips maximum. Next entry is there. I will mark it with these red vertical lines. Here is also your entry. Here is also your entry. You see, green appeared here also. Green appeared. Green. So MACD needs to be below, but EMA blue needs to be above red EMA. Okay? So blue EMA needs to be above red EMA for long trades, and green should be, and MACD should be below zero, but green line should appear at this blue thin line cross. Okay? Now let's see short. You see long. When trend is strong, you will get many good signals. For short entries, red needs to be above blue, and MACD needs to be above zero line, and red should appear. So this is your entry here at this bar. Your stop loss is a couple of pips below last high. Here. Here also. And there also. And when you notice that chart bar loses momentum, as is this example, you can close your chart and wait, because probably the signal will change. And here the trend has changed, the trend on range bars, and you see, then you will get long signals. So the system is very straightforward. Now a question John is asking me, no sale if blue EMA is over red. In this example, you just go for long trades, because as I told you, this is trend following strategy. So you follow the trend. The trend here is buy. Blue is above red, it's long trend, and you go for buy setups. Your buy setups are when MACD goes below zero line and green line appears as here. So this is a signal for you to go long at the first close. So you need to babysit your trade. So this will be your signal to go long. Type of order, so you always need to pay attention to trend. Very easy, very easy system, and I think that you can be profitable with it. Just test it. If it works, I know it works, but you need to test it, because you cannot go live without testing it, right? Same here, guys. Short trades. Look at this, excellent examples. Yeah, it looks really good, and indeed it's good one. Look at this. Red above blue. We go for short trades. This is not a lie. This is real chart. Here, this will appear short. Here, another example for short. Here. 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 There. Look how many good shorting opportunities. So I don't know if it works on other pairs. I traded only with euro dollar back in time, and it worked great. Sorry about this. For stop loss, I will use these examples. Sorry. Now this is a wrong button. Here. For stop losses, okay, let's go with these short examples. Short trade management. Well, you see, if you trade only one pair, especially if you're a beginner, it's okay. For me today, I don't trade one pair. You know, I trade 24 pairs. And simply euro-dollar is not enough for me. But, you know, if you want to be, if you're a beginner trader and you want to feel the market and you want to have some profits, then you can trade only one pair. You can try it on other pairs. I don't know, but these settings on MACD 8.16.5 are suitable for euro-dollar, okay? It's the settings are suitable for euro-dollar. So stop loss. If your entry was there, I would see how big stop loss is here. 13 pips. So I would use 15 pips stop loss here. So stop loss should be put here. If you trade it here, again, stop loss I would put here. If you trade it there, I would put a stop loss 3 pips above this high. If you trade it short here, it's a logic to put your stop loss 3 pips above this high, right? Same goes from there, above this one. Now, we see that the price is retracing here. We made an entry here on this second candle. So where would we put our stop loss? I would put it here because this is not enough to 2 pip stop loss. It's stupid. Believe me, guys, don't go with those kind of, I need to say, nonsense, not to use other word, bullshit, because traders who put 2, 3, 5 pips stop loss, it's stupid. It's simply stupid. You don't go with that. You need your stop to be flexible. Why? Because it doesn't matter. You know what the problem of most traders, most even professional traders, they say, okay, I made, I don't know, 1 to 10 risk to reward, and let's say that the trader made a 100 pip winner from 10 pip stop loss. It's stupid. You don't go like that. That is not trading, because sooner or later your account will be burned. Okay? Why? Because when you put 10 pip stop loss, you need, you know how we trade. You know how I trade. And that is why I have been successful last 6 years, let's say 5 years of full-time trading. Why? Because the risk is based not on your profit, not on your target price, TP, on your take profit. It's not. The risk is based on your stop loss. And if you put your stop loss of 10 pips, let's say that you can trade 1 lot, and you will use maybe 2 lots because you didn't put 30 pip stop loss, you put 10 pip stop loss. And most of the time, your trade will be a loser, because when market gets volatile, your stop loss will be hit. And it will happen 1, 2, 3, 4, 5 times. It's called death by 1,000 cuts. Basically, every time you make a small stop loss, most of the time your stop loss will be hit. And then the price may go into your direction. So guys, if you want to listen to me, don't listen to others who tell you to make small stop loss. It's stupid, because your entry is always based on your stop loss. Your risk management is always, always, always based on your stop loss. If your risk is 2% and your stop loss is that big that it allows you to trade within that 2% and you don't want to make additional trades, then you need to calculate that. That is what we teach. That is what I teach also students on Admiral Markets webinar. You just place your stop loss order. Usually it's 15. I don't ever go below 15, but my average stop loss on intraday trades are 30 pips. And I always based my money management on that. So if I trade account of $10,000 and I put a stop loss of 30 pips, I would use 0.3 lot size for that. And that is how I manage the trades, and that is why I have been successful so many years in this market. I haven't burned any account last 4 years because, you know, when you trade for yourself, when you trade for investors, you need to go with your money management. There are many people who I know who call themselves professional traders. I won't speak their names, but they are not professional traders because I see that the analysis is not professional. I also know that let's say that some of them are on Forex Factory. They are not professionals, some of them, but I'm very happy that on my thread there are mostly the people who trade are really professional, such as Dance, EG Kid, which may do webinars on in Egyptian. So there are some very good traders there. There have been some many students, good students of these free webinars, such as Kalyan, such as Law, such as many who I see regularly on my webinars. I'm very happy. And you know, if you follow me, if you listen to this, what me and Chris are teaching you, and Chris is a great guy also. If you listen to us, you will be safe. Even though if you don't make a lot of profit, you will keep your account and the profit will come. Be patient. You first need to learn not to lose your money, to stay safe. And when you learn how to stay safe by applying a proper risk and money management, then you will learn how to make profit. And the problem is that many fake analysts and many fake teachers tell you, okay, we will make profit first. No, trading is not about making profits. The first thing is to keep your account safe. And the second thing is to make profits. Remember that. If you remember that, you will be safe till the rest of your life. Okay? Keep your account safe, then make profits. Simple as that. So, if you see that you have a stop loss lower than 10 pips, then you just put 15 pips. That is the minimum. 12 to 15 pips in this method. Here also, where would we put stop loss? Now, if you would put the stop loss here, look, 6 pips. Here, 17 pips. Okay, if you want to be a little bit conservative, then go here. Put a stop loss 3 pips above this high. So, if you place your order there, it's 10. Great. It's something around 13 pips. What about here? If you made your entry there, here, where would we put our stop loss? We will put it here. It's a simple logic, guys. 3 pips above this high, okay? Simple as that. 16, 70 pips. It's okay. What about long trades? We made a long here. Where would we put our stop loss? Let's delete this one. I would put it personally. Let's mark it with a red line. This is our entry. Okay, this is our entry. Where would we put our stop loss? I wouldn't be putting it here. 7 pips. It's not much. But I would go somewhere around there. You see how the price consolidated here also. So it's about 20 pips. Yes, it is 20 pips, but you will be safe on a volatile price action. Now, this is also an example where you can make an entry because the price was below MACD, then it's just at 0. So you can try also to trade this. And in this example, I would put my stop loss here because it's something around 30, 40 pips. Here, let's see here. You can put here 12 points, or you can be a little bit conservative, 16 points. 3 pips below here or there. Now, for target price, for taking profits, Let's go with short trade example. If we shorted it there, we would take profits around here, or you would use trailing stop. But usually you would aim for 5 to 15 pips. In this example, even 20 pips could be achievable, because this was the last support and you trade towards the support, always towards the support. Here, you think probably that this support will be broken, and you go into history. So the history says the last good support was here. So if you place your entry here, you would trade towards this support here. Here, another entry. If you trade it here, you see the last good support was there because this is too low. If you trade over this support, well, it's 7-8 pips. Still, it's okay. It's okay because it fits into 5 to 15 pips of a profit. But if you go there, again, 13 pips of profit could be achieved. And so on and so on. So it's very clear where you should put your stop loss and take profit. If you're not sure, I can show you again. But if you're sure and you want to use this method and this system, do not hesitate to contact me, guys. You just write me an email. You can write me an email saying I'm interested in this range bar strategy, and I will of course send you the full template. But of course, you need to know how to set it up on your chart, so you can use this video to set it up properly on your charts. So guys, if you have any questions about this strategy, you can ask me now. If not, we can slowly finish our webinar. Be wary today, as I say. Today, FOMC meeting in 1 hour, so anything can happen. Of course, for ATR Stop Pro indicator, be sure to sign up. I will be holding the webinar on April 27, and I will be explaining about the best indicator for placing ATR stop. It also calculates the levels, so it acts also as pivot point. It's a great indicator, and only live accounts can have it, and that indicator cannot be found anywhere on the net at the moment. So if you want to have it, if you want to know how to use it, and you should have it because it's a must on Pro Charts, then you be sure to sign up. Also visit Chris Live Trading Lab, Pro Lab, and of course weekly Forex recap. We had great trades. I will make soon. I will make a recap. I will make a recap of this weekly recap. We are in a good profit. We had some losses on Euro Dollar, small on GBP, but Aussie and Euro CAD were great. And also updates of the trades, you could read it there. So many good trades after weekly Forex recap, so you can sign up for a new recap to trade and get some free pips. So be very cautious. You see, this will appear when Euro Dollar with this pair give you a short signal. It will tell you short, but you neglect it for valid short. It should be above zero line. So don't pay attention on that pop-up window. Just use this, what I tell you, and always try to short it if MACD is above zero, not below zero. And yeah, thanks T. Always happy to attend your great webinars. Hear you. Thank you, Lord. Thank you. Yeah, I'm very happy that you are here. Also, John, just send me your questions about this strategy. I will send you. Yes, sharing free pips, sharing strategies, so you can all benefit from it. Thank you, guys. Thank you very much for attending, and talk to you very soon. Be cautious. FOMC, don't trade today. See ya, guys. Cheers.